Airbnb stocks just crashed down big, minus 30% in 1 month. People are panicking. But my analysis shows something very different. In fact, my unique indicator, the value ratio, it's screaming buy now. Just give me 10 minutes and I will show you exactly why this crash might be the opportunity everyone else is missing. Now, full disclosure, this isn't just theory for me. Seeing my value ratio green light, I took a big position on Airbnb myself a couple of weeks ago. Is it risky? Yes. Is it the right move for everybody? Absolutely not. So you have to decide if it's the right move for you. By the way, my name is Adri, stock valuation is my passion, and to help us achieve financial freedom, I developed a new way to price companies, the value ratio. This stuff is all I do, all day long. Let me be very clear though, this method is new, is experimental, it's definitely not financial advice, it's just YouTube entertainment. Okay, Airbnb trades around $110 a share, and that's about a $70 billion market cap. Everyone knows Airbnb dominates hospitality. Tree houses, castles, you name it. The platform is incredibly popular. The moat is so strong that the word Airbnb is now synonymous of renting a home. But a strong moat doesn't necessarily mean a good investment. We need to connect that strength to the numbers. So, to value Airbnb, or any other company, I watch at 3 key metrics: earnings, growth, and risk. Let's start with earnings. So, if we buy a company we want to make money, how much can we expect to earn from Airbnb? Well, gross margins are very strong, over 80%. I expect the companies I invest to convert at least a quarter of the gross margin into profits. Airbnb passed this test because it's currently stabilizing around 25% in owner's earnings. Considering 11 billion in revenue, 2.7 billion in real earnings. As a baseline reference, the investor price to owner's earning ratio is 23. It's similar to price to earning ratio but slightly modified, slightly improved. And this means that Airbnb has a price of $23 for each dollar of profit. The current market median is 26, so at first sight Airbnb isn't expensive. But we can't invest based only on this metric. Growth and risk must be included, so let's move to growth. Analysts expect a 10% compounded annual growth rate for the next 5 years. This is not crazy growth like Hims, Palantir or Nvidia, but it's above the market average. Personally, I find 10% achievable. Of course, if a recession comes, growth might pause for a couple of years, but Airbnb is really pushing innovation. Just check this clip from the CEO, Brian Chesky.
So what if the Airbnb brand meant so much more? And I think there's a lot of types of experiences and services that we could launch. It's hard to give examples because now I'm giving away the product. I'll tell you, next May, we're going to be unveiling an entirely new Airbnb. It's by far the biggest moment in the company's history since its founding. And you're going to see Airbnb take the model for short-term rentals or homes, for short-term stays, and we're going to bring it to all these new areas.
The potential here is undeniable, and we are almost in May. I believe after improving the hosting experience almost to perfection with the co-hosting, they will expand offerings into other verticals, of course starting with events, but not only. For example, they could offer transportation, guest landing cars, bikes, boats. I like to be safe, so I'm forecasting a 10% growth, but I wouldn't be surprised if we end up with more than that in the next 5 or 10 years. Basically, we have a company trading slightly cheaper than the market median, but with a higher growth potential. And this is enough to make me very interested already, but before jumping to any conclusion, we must talk risks. Risk is where most investors lose money, so let's be honest and talk about Airbnb specific problems. First, regulations. This is the biggest risk, in my opinion. As seen in New York, many cities are imposing severe regulation to limit Airbnb's penetration. The business is such a disruptor, they are trying everything to slow it down. In Italy, for example, the government is trying to ban remote check-ins. Second, negative sentiment. There is a growing negative sentiment amongst the local populations. I come from Florence, and tourists are Airbnb-ing the entire city center. Check it out. In a 50-meter street, there are 20 accommodations. And it's like this all over the city. My friends even claim Airbnb is unethical and should be stopped. We have seen protests against mass tourism in Spain, New York, LA. Third is cyclical demand. Travel is a cyclical sector. Profits will take a hit if a recession arrives. However, the black swan for Airbnb already happened during COVID. If they survive lockdowns, I believe Airbnb will easily survive a recessionary slowdown. Of course, it would be different if, let's say, World War III would happen, for example, but again, in that case, we will have much bigger problems than our portfolio performance. Fourth is competition. Hospitality is crazy competitive. Airbnb and bookings are leaders, but everybody else is trying to grab a piece of the pie. Yes, headwinds exist, but Airbnb excels against other companies in all major risks areas. Profitability risk. Not the case for Airbnb. Margins fluctuate due to seasonality, but free cash flow seems strong and stable. ABNB generates tons of cash already, repurchasing more than 3 billion in stocks last year alone. 2. Bankruptcy risk. Many companies carry huge debt, a real risk for shareholders. Airbnb, however, has 10 billion in cash and just 2 billion in debt. Balance sheet risk is basically zero. 3 is share dilution risk. You don't want a company diluting your ownership. Not the case for Airbnb. They have significant share-based compensation. I would prefer less, but they have even larger buybacks, so the shares outstanding are decreasing. 4. Bad management risk. Again, not the case here. Brian Chesky seems very capable, is young, likely staying with the company for decades. More importantly, management have a very big stake of the company with almost 36% ownership and billions in value. To sum it up, we should be aware that Airbnb faces several challenges like regulations and competition, but I don't find the company very risky overall. I gave it a risk score of just 15 out of 100. To recap my assumptions, 25% owner's earnings margin, 10% growth for the next 5 years, and a risk score of 15 out of 100. At today's price of $112, it gives me a value ratio of 16 that points to a fair price of at least $140. The company was very overvalued and hyped during the IPO, but finally we have reached the price I'm comfortable buying. All considered, Airbnb is quite cheap right now. I believe my assumptions are conservative. Airbnb will likely go back to all-time highs during the next 5 years, giving me above average market returns. Therefore, I bought 250 shares at $120. It feels like a relatively safe bet for my standards, and I plan to hold the stock for a while. I just want to take a quick moment to thank all my new subscribers. We passed the 300 marks. Next goal is 500. So please leave a comment, like, share, anything. Thank you. Next video will be about another one of my holdings, Elf Beauty. If this video is already published, you can watch it here. Otherwise, please subscribe, hit the bell, and you will get notified as soon as the video comes out. Thank you very much for watching. See you next week. Peace out.